Good afternoon, everyone. This is Henry, and as we get into tonight's free video, I wanted to show you one of my favorite market internals that I have used really since day one of studying the markets and continues to work, I would say, exceptionally well. You know, knowing that there are caveats, knowing that there are nuances. So let's go ahead and get into it. And it's really just to highlight that when you look at the S&P today, the trailing ATR stop really only had one little blip, one little spot here where the decline was enough to shift it over into the sell side, though it lasted, hardly no time at all. And then giving you a pretty straightforward and basic indicator gave you a way of following the bullish trend all the way into the end of the session. So why was the price action so straight up? I believe it is in a large portion to everyone having gotten short yesterday. And the way that I try to define everyone having gotten short is by looking at the put-call ratio. So when we look at this put-call ratio, and I've got it here on daily bars, but there's two things that I want to make note of. The first of which is the reading and really the close above 1.0. The close was really closer up here into 1.1, so it satisfies being above 1.0 by a good margin, and that's the first heads up that you may be seeing, bears are just getting a little bit too greedy. And then the other part of this, and what really helps distinguish, because you could look at it and say, well, when you look at Tuesday's bar, you had a close above 1.0, but that did not bring any short covering. Okay, fair enough. But the reason why this instance is so, more important is it satisfies above 1.0, but it is also the most extreme reading that we've seen, really since back here, March 23rd. So it's the most puts we've seen purchased since then. And that, type of fear-based buying when everything looks so bad right ahead of these binary earnings events that have done such a good job of flipping that switch, well, you see how you have shorts that are stuck on days like today, and when your perma bulls are buying and then bears are also buying because they're having to cover short positions they are stuck in, that is when you wind up with days like what you saw here. Now, as much as that I think is a helpful signal to remember and a recap of the day, where does it take us into tomorrow? Well, it's hard to make a lot of predictions about the overnight action. We've got Amazon numbers that have been released and looks initially positive, trading up about $9 or so. But what I'm going to assume is that we get some type of generally bullish open tomorrow, and then watch 4150 in the SPX. That's going to be a critical area of resistance. And I, in theory, will put a pause to this straight up movement. And then you see if the reverse can come true. If if Friday happens to be a big up day, see if you get that put call ratio on the other end of the extreme. And that may give you a heads up that markets are going to try to top out. But I hope you find the review helpful. You guys have a great rest of your evening, and we will see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com. And I hope to see you in the chat room sometime soon.